so that I can drop it on my channel. So I'll be starting from market structure. I'll be just assuming that I'm teaching newbies that are not yet have the basic understanding. Where is this thing? Hold on, guys. Hope you are seeing my screenshot. Hello, can you guys see my screen?
Yeah, I can see it.
Okay, now we starting from basic structural structural basics are uptrend. Starting from number one, structural basics are uptrend. We have downtrend, which is also called bullish and bearish market, and we have accumulation also, which is also called ranging. We have accumulation, also known as range market, So now we know the basics of structure market. Now the textbook version they will tell you is markets move up, break structure up, break structure up, break structure up, break structure up. When market is breaking structure to the upside, this upside here is what is our higher high, and this down part here is our higher low. Higher low. And when market is in a downtrend like this, when market is coming down like this, the textbook version, this is our lower low, and this is our lower high in a downtrend. And if market is doing something like this is just consolidating, it's not doing anything, it's in an accumulation phase, it's just pushing up, pushing down, pushing up, pushing down. But there's something I will explain to you guys about these three markets. This is just the basics of market structure. This is the basics: uptrend, downtrend, accumulation, or ranging market. But the advance is that some people will not tell you is when market will not just be moving up like this. If market wants to move up, market will move like this, break this structure to the upside. We can probably create a liquidity here, push it up, take out this liquidity it's created here, then continue moving up, pull back again, pull something that sometimes it can break it above this, come back to take out this liquidity. This first pullback is the liquidity it created, and it will break above it. That's the advance. The advanced structure is before markets move in any direction of its choice, it needs to take out a liquidity or an inducement, any one of it. But inducement is also a liquidity. We'll talk about it under types and form of liquidity. So it will either take out an inducement liquidity, either take out an external or internal range liquidity, either take out trend line liquidity. Everything is coming to this to take out a liquidity before moving in its proper direction. Same as for a downtrend. When we are on a downtrend like this, when markets break structure like this to the downside, it creates a inducement like this first, take it out, then go in a proper direction. Hope that is clear about the uptrend and downtrend.
Yes.
Okay, now if you are in a ranging market, how does some people will tell you a ranging market, you don't need to trade a ranging market. A ranging market is dangerous, is that, is this. True, a ranging market is dangerous if you did not know how to approach it rightly, but there are some times that a ranging market can, if you are on a higher time frame of a weekly or a daily, a ranging market can take a whole month to do what, range throughout that month. If you're on a daily chart, you will just be seeing market moving up, moving down, not passing a particular, let's say we have something like this and we have something like this. If you're on a daily time frame, we just see markets doing something like this inside it for throughout, let's say this is a month, this is a monthly, this is a weekly range or a monthly range. On a monthly range is, okay, let me explain it like this so that I can get it very well. Let's say on a monthly range, where is this box? Okay, on a monthly range we have something like this, we have something like this, right? And we have, Mr. Bartley, just follow up. I know you have not get into this, but Mr. Michael will understand what I'm saying about this. We are still going to get there, but I just want to use it to explain one or two things.
Okay.
When we have another candle like this and form like this, initially on a monthly range, which is CRT, on the monthly time frame, price has already swept this low here. So on the monthly time frame, it's telling us that it's what is going bullish, or let's say something, we are in something like this. Okay, we know after price swept this level here, we are expecting it to come to this level here. But on this monthly time frame now, price swept this, we know it's going to do what, come to take this. But when we now get to a weekly time frame, let's say a weekly time frame is like this, a weekly time frame, this is the range, this range and this range here. Okay, let me say this is it, let me make it align. This is the range, you know, this is the range we picked on the monthly. If you get to the weekly, it will be the same thing. On weekly will give us something like this. You know, we have a sweep here, let's say we have something like this. Weekly will give us something like this, sweeping it. But now weekly will not be, let's say we are now back into this weekly range, you are now seeing something like this inside this range. Yeah, this, if you are in a weekly time frame, this is something you will see on the weekly time frame for this. You know, a structure is fertile. When you are on a bigger time frame, is big. When you're on the lower time frame, it's break into pieces like a weekly. So if you go to another daily on a week, you see another break into pieces. I hope you understand what I'm trying to explain there. So now on this weekly, now that this weekly is now giving us a range for this monthly, does it means we will not trade for this whole 4 weeks? No, we are going to trade for this whole 4 weeks. It's just that the way you will take the trade will be very different. The way you will take the trade will be very different, because you'll be very careful of what the market is doing. So to take this type of structure on the weekly, we are still going to get there and explain it, trash it out. But because we are in a ranging market now, we mark the range. This will be our range low and this will be our range high. This will be our range high. So anything we are doing, and you can only know this range maybe after 2 weeks, maybe 2 weeks, and you go back again to your weekly candle or on the daily and you are seeing something like this, we just mark the range high and the range low. So you'll be inside that box. Anytime you want to take a trade from any range, you'll be targeting this I'm coming. You'll be targeting these parts here. If you see that the price, okay, the way the price closed like this here, the way the price closed, let's say this is Thursday candle. Let's say Thursday candle give us something like this. Hope you guys are understanding it. If you do not understand, bring me back. I'm going to definitely explain from the beginning. So let's say Thursday candle, we have something like this. We have something like this. We have something like this, right? And Wednesday candle was like this. Let's say Wednesday candle was like this. Wednesday candle was like this. Okay, so how will you take this trade? How will you take this trade? You know, we are inside this our weekly. We are inside this our weekly range. How will you take this trade is you will mark the previous high, which is this, and the previous low, which is this, inside this range that we spot. And what did you see? We saw that price swept this previous low. So now our next target will be what? Our previous high here, or this next candle here. This candle here will be our next target. But to be on a safer side, we know we have been, because of what the monthly is telling us, we know we are inside a range. We'll be using this next candle inside this weekly range. So we'll be using here as our target, which is a key level. So we'll be expecting on a lower time frame, which is daily, anything that wants to happen should come and tap in here to do what? To take out this liquidity. Is this clear? Did you understand it in any way, or are you confused?
So it looks clear.
Okay. What of Mr. Michael? Mr. Michael, are you there? Oh, I think his network. I'm not hearing him, but I hope you understand it as well. So now don't worry, I'm doing the recording so I can send it to the group. You can watch it over and over again. So now if price tapped in here, we know it's coming to do what? Take out this level here. But how do we know we are leaving this range? How do we know that we are leaving this range? Now, to be sure that we are leaving this range, we will wait for, now I explained how to trade inside that range. It's just that what you will be targeting on your lower time frame will be that weekly high. If price reacts from the weekly low, just target that range weekly high. Do you have any question, Mr. Michael?
Yeah.
Okay, go ahead.
So as in a CRT, there are 3 candles, right?
Yes, CRT. Yeah, CRT majorly, the major one that is very common and
it's the power
effective
of 3, right?
is the power of 3. But CRT is in different form. They have inner bar, they have 2 range, they have power of 3, they have 1 ranging candle. We are still going to talk about all that CRT when we get to types and form of liquidity.
About if you are trading within that range.
Okay.
So we don't take the TP to the extreme.
No, that's what I was explaining. If you are trading within this, maybe on the monthly now, your monthly is what is bullish because it has swept this level. Yeah, but when you get to the weekly, you notice that the weekly is doing what? Is ranging. What you will do on the weekly is you will mark the weekly range high, which is this. Maybe I should write it. range, you mark this weekly range high, and you mark this
And weekly range low.
range low. So now anything
Okay.
you'll be doing for now
Should
is
be
you'll
within
be
the
looking
range.
for your to be on a safer side. If price reacted from this weekly range low, just look for the weekly range high as your next target. When price reacted from
Okay,
the
now I
weekly
get.
range high, look for your weekly range low as your what next target.
Okay.
Do you
Thank
understand
you.
that?
I understand now.
So now how do you know that you are leaving the range, like the market is leaving the range? This is what you'll be expecting. I've explained this range stuff, so I'll be deleting it. So this is what you'll be expecting if you want market to leave this range. You'll be expecting market to push to this upside completely, maybe tap on your weekly time frame. You may have a fair value gap here. And remember, I used to say, both Mr. Mike and I remember the lectures we have had so far, I used to tell you that when you have an imbalance in all time frame, there will be an imbalance. Once you have an imbalance, like an imbalance inside that this your range, how do you know market wants to leave the range? Just watch market leaving this range, tapping into this your imbalance. Once market tap into this your imbalance, it has what? It has expand. It has give us an expansion phase leaving this range. So now market expanding now, this will now be what? This range high, this our range high here will be our breakout, or break of structure, any English you want to use. But there is difference between breakout and a break of structure. I'll do a brief like lesson about that before we end this class. So this will be our breakout. So since we see our breakout here, we already know the market is doing what? It's pushing to the upside. But we can't just enter directly to the upside like that. So we look for a key level below this breakout, maybe another imbalance or a short pullback like this, and we wait for price to take it out before doing what? Moving fully to your direction. Is it clear? Did you guys understand it at all?
Yeah, I
Okay.
understand.
Mr. Babatunde, what about you? Is Mr. Babatunde there? Okay, let's continue the class.
Yes, I am. I am.
Okay,
I'm
okay.
listening.
Okay. So now that is just that about ranging markets if you are in a ranging phase. But some traders will tell you when ranging market is not healthy. Yeah, the fact is it's not healthy if you did not know how to go about it. But once you are able to understand market theory, you're able to understand key level, your support and resistance key level, you understand CRT, you understand liquidity majorly, you can trade inside this range for how long it's going to go. It's just that you be very careful. But what you be careful is that you won't, because you have a fair value gap here, you won't be targeting that fair value gap at once. You will wait. Where you want to target is that range high or range low. But once you target that and you see that price move above your target and tap into this fair value gap, you will know that the price has already do what? Move out from the range and is going in an uptrend. But you need to do what? Wait for this sweep and a break of structure back to the upside before do what? Considering it as a full bullish market. Because the fact is markets can leave this range like this and later deceive people to do what? Take this low back again before moving like this. A ranging market can do something to like this. So that is why people used to say wait, if you see a ranging market, wait for a confirmation before knowing what next. That is why some traders will tell you run away from a ranging market, because if you are not that experienced enough, you will be confused a lot. But once you have the experience, you are waiting for, if you spot a fair value gap here, you are waiting for price to come into that fair value gap, retrace back, create a false liquidity, which is inducement, take out that inducement to give you a sweep and start moving to your direction. This is what I meant. Now let's say we leave this price. I said this is our fair value gap. Price left this range, tap into this fair value gap. Because price has left that range, we'll be having like some back mind that okay, it seems the price is going bullish. But how do you want to know it's going bullish? You want to see price pulled back. Maybe it has some liquidity down here that it's pulling back to retrace. Once it pull back to retrace, let's say okay, this is our liquidity here. Price create this false liquidity for us, trying to do what? Deceive people to come in quick. So price, you just see price immediately do something like this and do something like this. So this process of price coming down like this, taking out this false liquidity, is called sweep. It has given us a sweep, and it has given us a strong low, and now it has given us a break of structure. Now you can now do start trading inside this, targeting this next high here. Is that clear? Did you people understand?
Yeah, I understand.
If you do not understand, just ask. I will explain, and I'll also drop this video on the group so you can actually watch over again if you are confused in any way. Mr. Babatunde, is it clear to you also?
Yeah, I'm following you.
Okay. Now I think I already talk this short class. Now we already mark out this one. Yeah, this is marked out. We already talked about these structure, basics and advanced, right? That's phase one of it. And there's another thing I want to explain now. It's still under the structure, basics and advanced. Structure, basics and advanced too. In all trend, we have expansion phase and we have retracement phase. When if price is in an uptrend like this, this is our what? If price is in an uptrend like this is our retracement phase. These are our retracement phase, and this long one that created this break of structure is what? Our expansion phase. The same thing too, if price is in a downtrend like this, we have these are what? Retracement phase. These are the retracement phase, and those long ones that give us the break of structure to the downside are what? The expansion phase. But meanwhile, when you have something like this expansion phase can take a month, it can take a week, and this retracement phase can just take like 3 days or 2 days, because it's a short pullback. But inside this retracement phase, it has taken out many liquidity, because inside this retracement phase there will be an inducement, there will be a fair value gap if you go to a lower time frames. So it's best to you on how you spot it. But what I'll do is, there's a way I do spot it. Once I have something like this, let's just glance through a weekly chart. Let's use USD JPY. Okay, we're using USD JPY now. Let me delete everything here. We using USD JPY now. So we seeing this initially, seeing this like this, seeing this. You don't really know if it's in an uptrend or in a downtrend. If you are a newbie that you do not understand the market very well, this will be confusing to you. But to me, it's in an uptrend. Why is it in an uptrend? Price has already towards giving me a break of structure to this upside here, and this will be my what, this will be my higher high, and this will be my lower low. So I already know that what this market is doing is what is giving me a bullish market. And I don't know, just have this in mind, we are still going to talk about it. You can change this to line chart to understand it very even more better. You know, when we are on the line chart now, this is what the break to the upside, and this is what the break to the downside. You can also see this also break to the what, upside. So this is telling us is what is a bullish trend. But when I consider this now as the break to the upside, I'll now look at the week, the longest week there. If this longest week now break a body, if a body break this longest week, is a valid break of structure to the upside. But if this body did not break it to the upside, market is still coming there later on to take it as our external range liquidity. When we get to liquidity, we talk about it. I'm just explaining something here. So now that we are in an uptrend, what do we want to look for? We want to look for a what, internal range liquidity that price is going to what, take out. So how do we know our internal range liquidity? The way I do know my internal range liquidity is, I don't know if I've explained this to you guys, but I think I've explained this to Mr. Michael. I don't know if, I think the last class me and Mr. Ajayi did too, I explained this. I said if you are in an uptrend like this level here will be our external range liquidity, because it's the one doing what, breaking structure to the up part, and this level here down here will be our what, internal range liquidity. Have I explained this to you, Mr. Ajayi?
Yes, you did.
Okay.
The price moves from one
liquidity to another liquidity. Okay. I think we are on a better picture. You see why I told you that last class I did with is majorly for you. You see that now when I'm explaining, I'm not going back, I'm just starting from those points. Mr. Michael have explained this to him also, even in a more, like, I think in a more broader light, and I think that is what he has been using so far, mostly in his chart, to do 1 or 2 analysis. So now,
okay, is it the Mitchell on the group?
What did he say?
I mean, is it the same Mitchell on the group?
Yeah, the same.
It's Mitchell.
On the group. Yeah, it's the same. His name is Michael. Actually. So now in this market now, we know we are in a bullish trend, and this will be our what, external range what, liquidity. Price has did what, take out our external range liquidity. Where did we expect price to come to next? We're expecting price to do what, come and take out this internal range liquidity, if you ask me, or even this, because this is more closer. Yeah, but the real truth is markets will not just come all the way down like this to come and take this out. It's not possible. Markets will do some retracement, some expansion on a lower time frame before it gets to this place. So how will you trade inside this? One thing I do, I know I've already fast forward now, I just hope when we get there we just brush through it, but I just want to use it to explain that advanced market structure, that expansion and retracement phase for you. Now you know that market has do what, giving us an expansion phase, because it did what, hold on guys, I need to put this on don't disturb. Okay, are you with me guys?
Yeah, we are around. We are
Okay. A call entered, so I need to be sure. So you know, price has already given us an expansion phase, because it did what, it has taken out this external range liquidity, which is this. Price has already given us this expansion leg already. So now what are we expecting price to do now? We're expecting price to give us another what, another retracement before taking out this. This is where price is still coming overall to take out this external range, because this is a new external range liquidity here. So this is where we are expecting price to come and take it out. But before price come and take this out, we are expecting it to do what, give us a retracement and boom to the upside. So in this kind of market now, in this type kind of market now, what I will do is I will use my Fibonacci retracement tool. So using my Fibonacci retracement tool, the major reason I'm using my Fib is I want to know if I'm in a buy zone or I'm in a sell zone. If I'm in a sell zone, I'll just follow the trend on a lower time frame to sell inside a buy zone. If I'm in a buy zone, I'll follow the trend to do what, take out this external range liquidity. So because I'm in an uptrend, I'll be drawing my fib from down, no, okay, I'll be drawing my fib from the upside like this to the what, to the downside. So my own fib, this green area is my buy zone and this red area is my what, sell zone. So now the truth is, some trader will want to use this key level as a what, as a key level, right? And I think I did something like that too last week when we were analyzing that we are in a buy zone. I think I did a mistake. I did not draw this fib right. So this level now is still what, is still in a sell zone. Before I can consider this market buying, I need the market to come to this key level here. This is one key level here, or this extreme key level here. But this key level here is close to it, here. So I'll be using this as a liquidity because it's in my sell zone. You know why am I using this as a liquidity is I don't want to go deep inside this. Let me just stop it for there. We are still going to explain it better when we get to the main topic of it. But you understand this retracement and expansion phase I'm trying to explain, right?
Yeah.
Okay.
Yes, a bit.
Okay. You guys, just give me few minutes. I want to on my generator. Let me